One of the best ways to stop carrying a balance on your credit card and save money is to create a realistic budget and track your spending habits. A budget is a plan for how you will spend your money each month. It helps you to live within your means, pay off your debts, and save for your goals. But how do you create a budget that works for you? Here are some steps to follow. Calculate your monthly income after taxes. This is the amount of money you have available to spend each month. You can use your pay stubs, bank statements, or tax returns to find this number. If you have multiple sources of income, such as a side hustle or child support, make sure to include them as well. Identify your fixed and variable expenses. Fixed expenses are the ones that stay the same every month, such as rent, mortgage, car payment, insurance, etc. Variable expenses are the ones that change depending on your usage or behavior, such as groceries, utilities, gas, entertainment, etc. Set savings and debt payoff goals. Before you allocate your money to your expenses, you should decide how much you want to save and pay off your debts each month. This will help you to achieve your financial goals faster and avoid paying more interest on your credit card balance. Record your spending. To create a realistic budget, you need to know where your money is going. You can use a spreadsheet, an app, or a notebook to track your spending for at least a month. Write down every purchase you make, no matter how small it may seem. This will help you to see your spending patterns and identify areas where you can cut back. Track your budgeting progress, review, and revise. Once you have a budget, you need to stick to it and monitor how well you are doing. Compare your actual spending to your planned spending at the end of each month and see if you are meeting your goals. If not, you may need to adjust your budget or find ways to increase your income. Creating and following a budget may seem daunting at first, but it is worth it in the long run. A budget can help you to stop carrying a balance on your credit card and save money for the things that matter most to you. If you want to stop carrying a balance on your credit card and save money, you need to pay off your credit card debt faster. One way to do that is to use strategies like the snowball or avalanche method. These are two methods of paying off debt by making minimum payments on all accounts and then using extra funds to pay off one debt at a time. The difference is that the snowball method focuses on the smallest balances first, while the avalanche method focuses on the highest interest rates first. Let's see how they work and which one is better for you. The snowball method is based on the idea that paying off the smallest debts first will give you a psychological boost and motivate you to keep going. For example, if you have 4 credit cards with balances of $500, $1,000, $2,000, and $3,000, you would start by paying off the $500 card first. Then you would move on to the $1,000 card, and so on. You would still make minimum payments on all the other cards, but you would put any extra money towards the smallest balance until it's gone. Then you would use the money you freed up from paying off the first card to pay more on the second card, and so on. This way, you create a snowball effect that helps you pay off your debts faster. The avalanche method is based on the idea that paying off the highest interest rate debts first will save you the most money in interest and reduce your total debt faster. For example, if you have 4 credit cards with balances of $500 at 12%, $1,000 at 15%, $2,000 at 18%, and $3,000 at 20%, you would start by paying off the $3,000 card first. Then you would move on to the $2,000 card, and so on. You would still make minimum payments on all the other cards, but you would put any extra money towards the highest interest rate balance until it's gone. Then you would use the money you saved from paying less interest to pay more on the next card, and so on. This way, you create an avalanche effect that helps you pay off your debts faster. So which method is better for you? It depends on your personal preference and circumstances. The avalanche method will cost you less in interest over time and may help you get out of debt sooner. The snowball method may provide more motivation and satisfaction as you see your balances go down faster. Both methods can help you regain financial freedom and improve your credit score. You can use specialized calculators online to compare them and see how much time and money you can save with each method. The most important thing is to choose a method that works for you and stick to it until you pay off all your credit card debt. Remember to avoid making new purchases on your credit cards while you're paying them off. And once you're debt-free, try to pay your balance in full every month and avoid carrying a balance again. This way, you can save money on interest and fees and enjoy the benefits of using credit cards responsibly.